Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. It is March 31st after the close. We are recording end of quarter, Barry.
Yeah.
Can you believe it?
We're here. I guess I have to believe it. I feel it though, it's like we're
Yeah.
waiting.
And it was a busy week, a lot of things moving, a lot of stuff going on. On today's show, we're going to cover the big five with Barry, as we call it, which is ES, bonds, crude, gold, copper, and the dollar and the euro. Today, I've got a bunch of stuff to cover. We're going to look at wheat, corn, soybeans, silver, nat gas, sugar, and cocoa. So it was I was looking at the updated spreadsheet, that we put in the numbers every week. Man, a lot of markets change their high and low limits. And that's generally a sign of major activity, major moves. We broke out of certain things. A couple of them moved down, but most of them were moving to the upside on the commodities. So let's jump in with Bitcoin. The saga at this full square continues. If you look at it, it's been a couple weeks now. We've just been banging up against this the ceiling of this full square, in this area of resistance that we built in May, June. So it's a real battle, and nobody has the edge right now, other than they haven't been able to get above. So as long as we're below, the weight of the evidence says we're going to come down and test this half square. So we're watching this closely with risk breaking out, and gold and silver and sort of alternative currencies doing well. I wouldn't be surprised to see us push up. Maybe we get a false break and go back under, but this kind of pressure and sticking here, you could say for the last 2 weeks, we've just been doing a sideways correction after a pretty big move, which ultimately could, pretend one more push up. So we'll have to see, but we know the levels, right? You got the square here at around 28.8, and the half square is around 24,400.
Right.
In between, you're in no man's land. So we watch it, see how it plays out. As long as we can stick to that, it's kind of a bullish consolidation without much correction in price. Anything else to add on Bitcoin?
No, I think you summed it up nicely. That's kind of what's happening, and it's at a critical, decision point. So it's time to be patient and wait for it to sort of show its hand, right?
Absolutely. 100% wait and see what happens. All right, let's throw it over to you. We got a lot to cover and a lot happened, so let's get into it.
All right.
Man, we really started moving after we broke out of your 4038 area.
And that was the number, man. That was the number.
it was like, okay, the chop is done. Here we go.
We're not messing around.
No, I mean, we went right up to your next level too, just under it.
So, well, I think you covered the segment. We can move on to bonds.
Move on to bond.
Really, what else are you going to say?
Well, I think it's important though, because these numbers are good.
Yeah. Well, just like Ben mentioned, we looked, 4038 was our key level last week, and we were looking for some type of a break to the upside or the downside, but the balance point was the 4038. And you can see on Monday, we were right there. And did that nice little pullback, which showed up on a lot of places. And once we took out the high of the Tuesday bar, we were off to the races. 438 was kind of was the test, but once the Monday high got taken out, it was off, right? Everybody saw that. I mean, even if you didn't know about the level, you'd be on board. So that picked up momentum, and we really, what I said last time was that if we take out 438 and we settle up above, which we did, was that we'll probably go up and test 4150. Well, got pretty damn close to it.
Yep.
Within 10 points, really, and it's all
Mhm.
right. We'll still have Monday left.
That's true. That's true.
But I think, you know, just like you were talking about Bitcoin, now we're at a decision point in 4150. You know, it's getting close to it. Maybe we might pop up a little bit above 4160, maybe. But now it's not the time to gamble your profits if you got some in here.
Mm-hmm.
Mainly because we are on a calendar basis. So I wanted to show you, let me see, I have a calendar chart in here somewhere. Yeah. So here we're coming up, well, over the weekend, we're about 180 degrees from that low that I use for some of the cycles. I'm using this low because a lot of cycles expired there, and this was kind of a false break or a ghost low. And so I use them both because if it's not that, this could work. And oftentimes you'd wait for this, but that already worked. So what are you going to use? So you got 2 points to watch, and one of them is at 180 degrees, 180, and that's a big deal. So 180 degrees from a low to high is pretty much, you know, after the 90, 180 is a decent, you know, that's a nice 6-month run.
It's important. Yep.
Yeah. So I wouldn't necessarily expect another 6 month out of it without any corrections. You know what I mean?
For sure.
S&P just doesn't do that often. And if we go off the low in October, then we have it showing up around 10th or 11th, around the 11th of April, which, you know, 10th, 11th, that's, you know, give or take a bar. That's a good point also. And if we go up in here, we're on 42.25 and square out, well, that would be a hell of a thing.
Yep.
Mainly because it'll give us a false break here. And boy, would that get everybody on the wrong footing.
And I've been discussing on Twitter with the followers that there's also a cycle coming in next week around the 5th, you know, and it can be plus or minus a couple days. So timing wise, there's, you know, given your charts and given that cycle, there's some timing next week we got to watch.
And it doesn't have to be exactly to the day, just like this, right? I mean, it was off by a few days.
Yep.
But sometimes that's how these natural cycles work. Like spring doesn't exactly start on the official technical spring day, you know. Some trees sprout earlier, some seeds sprout earlier, right? And sprout a little later.
For sure.
So markets are the same way. You know, when a cycle expires, it could have already started, and some a little late. Either way, we're coming into a window that we're not going to get for another 6 months. So I think it's prudent to notice that and watch it, especially the way we ran up into it, right?
Yeah. Yep.
So going back to our trading day chart. So that's what I would say. I think we have to watch that coming into it. And that early April, right around that April 10th, what's interesting is not only 180 degrees from this low, it's also 135 calendar days. I mean, 135 trading days from our cycle low. So just like you said, you have stuff coming in. You know, we have multiple different counts of cycles coming in. So we got to watch it. We're coming into some kind of an impulse. And it doesn't mean it's going to go nonstop into it. You know, we could correct and then take a breather and go.
Yep.
Which markets usually do. So that's it for the square part. I just wanted to cover the timing points. And taking it away, well, we have a potential ABCD sitting here also. Let me draw this in, right?
I put it in as a Gartley from that other high. Yep, but it's right there.
Oh yeah, that's a really good Gartley.
Yeah,
and that could be from here too. Either one, it could go from here or here.
Yep.
Either way, the target is up in 41.50 to 275 or so.
Exactly.
Smack in the middle of all this resistance, right? And it's kind of an interesting area because of this stop, that stop, and this stop. You know, over here, and over here. It
Mhm.
has like a history. It's got some celestial point that's that's got some traction.
Absolutely. It's one of those magnets, right?
Yep.
Attractor repeller type thing.
Mhm. So for next week, I would say, well, the level to watch would be 4150. I think it's fairly obvious.
Hmm.
And since we're coming into time cycles and everything, if you guys get some kind of a sell set up, it might be worth taking, as long as we're below 4150. And if we rip above that and get about a 10 point, let's say 50 to 25 points, and somehow we settle above 4150 and sort of pushing through 4175 or so, then I would watch it because we might have a little bit left to go.
Hmm.
As long as we're below 4150, I think you have to be really careful here to not to get in, just like the people that bought it up in here, people that bought up this breakout. You know what I mean?
Hmm.
People that bought this. So
Hmm.
even people that bought this that didn't get out, right? So,
Yeah.
and thinking that this was just a normal pullback and then we're going to take off and make new highs. So this is sort of a widowmaker kind of a line.
Yeah.
So at least last couple of years. So I would watch that. So I would say caution next week, and wait for the market to show its hand and so it's clear that it's above 4150 or not. Okay.
You know what? The thought I had, it was like the death zone for trends. That area.
Yeah, exactly. I mean, it's you can see it. It's very easy.
Yeah.
Especially when you have a line on there.
Hmm.
So we'll see. The other thing if you guys missed it, we talked about last week was about all the cycles that were at this high. So it'll be interesting. Now, what's interesting is this: if we somehow meddle in here and take this high out and settle up in here, well, clearly we're going to hit the 43s.
Hmm.
Okay. If we can't do that, then we meddle around here and we start losing some momentum. Well, then I think we're due for a little bit of a correction.
What are you using as your support now? 4038?
Support would still be, let me look at my 4-hour. Let me see what the nearest support is. I'll post this on Twitter, but I would say the nearest support for next week is around 41, no, about 4090.
Hmm. Right in there.
Right in there.
Hmm.
So 4090 would be about the support. And that's funny. This high happens to be just about in that level.
Yep.
So I would use the high of March 6th as support. Right?
Hmm.
Comes in about 4082, 890. I would say that's the area to watch. And yeah, so it's kind of a tricky level. We cleared that, then we get into, we're not going to get higher highs and higher lows that clean.
Right. Right.
Ripping all the way to 43. So we gotta watch it here.
Hmm.
All right, let's take a look at the weekly.
Boy, look at that. Look at that last bar, man. The whole bar is on top.
Well, what's interesting is how the low is above our level, right?
Yeah, yeah.
Right there. So I was watching that. I was showing that to my son, earlier because he's starting to trade. And,
Right.
I mean, look, if the low holds above that, we take out 4038, watch out.
Yeah.
And it worked out. And, we got of course, don't forget, we got this big triangle that we drew out.
Triangle's still going
From last week. So we can, do we really clear that, which just happens to be on that 41, 78, 80 level, which, we've got the Gartley coming in there. We got those other things there from the daily chart. Remember, we just looked at it.
Yep.
So you can see how, that's like a gravitational level. So if we get there and if we have a decisive breakout, well, then we got 4,400 to look forward to. Otherwise, there's a lot of air to fill in here.
Yep.
And a lot of uncertainty to go with it. So we'll see how it goes. But this was a nice couple, 3 weeks up.
It's like, be careful getting all bulled up because we're at the top of the triangle. If we don't break
Yeah,
out.
exactly. And I
Yep.
think we talked about that a friend of mine that I talked to you about, spoke to you
Mhm.
about, who gets all bulled up exactly at the high, you know?
Right.
And it usually places like this, and I would notice that when markets had a decent run and everybody's relieved, not a lot of put buyers, and somehow it's in the air, they catch the sentiment, they get all bullish, bullied up, and 1 or 2 days later, boom, it goes the other way.
Yeah.
Never fails. So the levels that we talk about are those levels. So watch out for that. So this is 41.50 for next week.
Mm-hmm.
And above that, I think we're clear quite a ways. If we got 50, then we got that 78, 75, 78, 75 to 80 level.
Mm-hmm.
It's all pretty, these are 4-minute bars these days. So it's not like it's a lot. So
Right.
watch that for next week. Moved on to bonds. Well, the big down channel is still going.
Mm-hmm.
And we drew up this box last week. By the way, if you guys like our work, you always forget to mention this, subscribe, ring the bell, share our work,
Mm-hmm.
and most importantly, if you like our work, let us know. It helps. And getting back into bonds, well, we had this, we looked at this last week from the last low. We went up 45 degrees up, it's a 90-degree square, 50% of the way up. And if we go, so remember that. So from this last low, we're exactly up 45 degrees, right?
Mm-hmm.
And if we go to the low in October, the lows are about at 50%. So there's kind of a bracket in here. And I have a feeling that bracket's going to be around for a while. So watch out for that.
Look at that price action, Barry, from the big up bar and then everything to the right of that. That's the definition of chop right there.
Oh man, it is. And there's a descending triangle going on there too.
Yeah. Yep.
Most other places. So this could be, watch the price action on these. I don't know how close you guys watch the bars, but we have a high, lower high, and somehow we fail it in here and we turn around and take out the low of the high bar, then we have 3 lower highs.
Mm-hmm.
And, that's about when they actually break down. So watch it. I know this is all tied to the rates and FOMC and the Feds and all of that, but on the technical side, you can see this is where it's been getting stuck over the last 6 months.
Mm-hmm.
So things are wrapped in here. If we get in here, either we're going to break and get to the 90, or we're probably going to be stalled in here for a little bit longer.
And Barry, looking at the intermarket analysis, so that's the same death zone that we just saw on the ES. Different level, obviously, but same death zone, right?
Yeah. Right in here, right?
Yeah. For bonds, there's your death zone. We just saw it on ES, so we're at a critical spot right now.
Yeah, call it the widow line.
Mm-hmm. Yeah.
So it's right there, and there are patterns that mirror like that between markets. So I think bonds, be careful, like you said, it's chop. Go ahead. What were you saying?
I was going to say it shows you that's the flow of capital line for these markets, right? Money comes in, money goes out. Money goes to equities, money comes out, goes back to bonds.
Exactly. Yep. That portion of it.
Mm-hmm.
So let's watch that for now. I don't have a whole lot to say other than we have support at the 50%, 128, and of course, if that takes off, then it will. When it does take off, we can look forward to new lows, but till then we have to be patient in here and watch the price action.
Mm-hmm.
Move it on to the weekly bonds. We have this little megaphone, little expanding triangle, really well configured.
Mm-hmm.
And we're not at the lower end, we're at the higher end. And it would be easy to spend a month in here, put in 4 bars, not a problem. So, like I said, be patient in here. And Go ahead.
In my review, I said there's a monthly spando too, so it's weekly and monthly, man. It's there. Bigger time frames.
Yeah. So, I mean, that's the thing, right? You're going to talk about some of these markets that are trending and ready to move. I think, when these markets get into these points, we want to spend our time with markets that are moving. So
Yep.
Here we have a nice box. It's a quarter of a square, just happens to be right there. And I think within that, if you want to day trade that, I think that's great. But if you want to look for bigger moves, we could break to the upside of this could easily be a second wave, right? And we could come back down one more time and then rally into the third. Who knows? But for now, we're going to use that as a expanding triangle and let it clear itself out. Because why, Ben? Because we trade the trend. That's why.
If it's not trending, we don't want to trade it.
Right. We just look at it or window shop it. All right.
Right.
Speaking of trending, now this one we called that low. Before it came in was warned. When it came in was told. And when the pullback came in, we told you about it. And there you go.
Absolutely.
So please like our videos. And
that's textbook, man. That's really, really good call.
Yeah. So that all worked out. 64 to 73. Nice leg. And now if you get up here, we might get into the halfway and then we settle above 73 or so. I got to recalculate some of these levels to see if it's still okay after all these months. Been working so far, so don't want to mess with it. But the fact is we were grinding in here at first, but it was grinding to the upside. You can see how the balance of the weight was to the upside. And so it tells you, there's a lot of it's strong. There's a lot left in here. And so we want to look at pullbacks to hold above 73. Right. And looks good. This is what we've been looking for. That was the kind of the flush. And this is the false break that we were talking about while it was going sideways. We said it's going to break to one side or the other. Then when it started breaking, I said, well, it could false break into the square and then run. And it's beautiful when it happens. So.
And a beautiful timing on that too. Look at that, right on the timing line.
Yeah. That was good. See, once in a while we get these.
Yeah.
Let's move on to the weekly. So weekly, well, here we go. Last week we talked about how it came right into the zone that we had boxed out. And this week, and then I said, the next test would be the 50% of the square. Well, we got through the 50, pushing up against this trend line that was in place. Closed on the trend line. So we'll see. Yeah, it might be a rest for a little bit, but really the big, like you said, that widow line up here will be about 80, where it keeps getting hammered every time you get up here, right? So
yeah.
So for now, this is positive. I think we've been leaning on taking the buy side signals.
Yeah, the only thing I'd add there is we're getting close to weekly and monthly resistance. Weekly on my stuff is like around 76 3/4. And the monthly, we're right there around 75, 85. So a breather here wouldn't be surprising.
Right. And we had these nice 3 drives here.
Looking
good. All right. Let's take a look. I looked at the weekly. Not much to say beyond that. Gold. Well, we talked about clearing 1940. And if we can hold above it, and this is what we mean by if we can hold above it. You see how on the 21st, 22nd, we banged up on there, right? And bounced. And then we came back on the 27th, inside day. Well, it broke to the upside. And so from here on, 1940, you can see it held higher low, ran back up. Now, we do have 180 count coming up from the low, coming right into these highs. So I'm a little suspect here at this point. We generally, we use the levels until we get to a level or a time and price point, and then we drop back. We wait for that to resolve, and then we jump back on the levels to trade the trend. That's really all we do. At least that's what I do, and I think Ben, that's what you do for the most part. So we can't really ignore 180-degree cycle coming in. So I would say if you've got some profits, goals hitting 2000, this is a good place to unload most, if not all. And if you're trading it, if you're investing in this, that's another story. Then it's great. But if you're trading it, this is the time to it's a decision point. You want to really wait till gold can hold above 2000 and kind of establish itself before it can run up. So at this point, we had a really fast and nice clean run. So it's a good time to take some. All right. And for next week, I think, if we can't clear 2000 next week, then I think we're going to be stuck between 1940 and 2000 going forward. Right. Till the pattern clears up.
100% with you there.
Right. Okay.
It's bullish, but it's also up on stilts into a timing. So we got to be careful. Again, that's like Barry said, that's for traders. If you have physical gold, it looks brilliant for the long term.
Should be walking out with a big smile.
Right.
Finally.
Yeah.
So gold weekly, well, it's pretty much the same story. We cleared the levels on the weekly. 1881 was the main level. Then we had 1919. We held above all of that. And 2000 was really the next point. And we got there 2 weeks in a row, 3 weeks. Now we're banging up against that. Take note, right? Banged up against it here, here. So, hey, if you got them, take some.
Smash and grab market.
Yeah. I mean, take some, because if it settles above this, you get plenty of time to get in the next trade.
No question.
Because, we could get to 21, fine. But why give up all this, right? So that's my take. Moving on to copper, not much. We made the low here. We called that out. That was fine. So if that was a 1 coming off of that, this could be the consolidating 2. And it's doing okay. And I think, copper is in one of these consolidation modes. You can see the bigger realm up here. The key here was that we hold above, 380, around 380, because you can clearly see the divide at the 50% line, 380. And that is 50% of the square that's working on copper. There's 90-degree square. This is 45. You can see we spent a lot of time 5 months below that. Now we flipped on top of it. So here you can clearly take your buy signals when you get them, because we're on the positive side of the square till we get to about 4.5. All right. I mean, this Gartley was a textbook, man.
Yeah, very nice. And I like the reaction coming out of it too. That tells you it's bullish.
Oh yeah, I mean, that was this low here. So now, well, we have a big Gartley here, A, B, C, XA, B, C, right? And if that Gartley is in play, then, we can, well, Jesus, this is gold.
Yeah.
Well, there's a Gartley in gold, everybody.
Yeah.
See what happens on Friday night?
Right.
Man, this week, I don't want to lie, but I'm pretty well baked by Friday,
It was a rough week.
Yeah, it was a lot to do this week. End of the quarter week. Well, weekly copper, basically we're hanging around the 50% of the square, 135 degrees up. And it is another decision point. And if we use these squares correctly, you can see we're kind of stuck in this zone. And which means, so when I say that, you guys, like on a weekly, what that means is when the price is along the bottom side of the square, you can probably take the short-term buy signals to trade to the long side. And we're up here and you get some sell signals, you're better off taking those. Especially if we're close to time cycles that are calling for something on the upside. And if the time cycles are still further away, then you can, trade into that along with the trend. And so copper is not really showing any signs of weakness. We held the lows really well. We're making higher lows and higher highs. And this high really didn't have enough of a weight to call it like a major high. So let's see what happens. For now, long as we're holding above this 390 basis weekly, copper's in pretty good shape. And let it, burn up the time to lighten up and get ready to go again.
Been really resilient. It's resisted going down much, hasn't it?
It's been acting really well. And that's during these times, right? So imagine when things are positive.
Yeah, it's going to fly.
Yeah, it could go. I mean, it's had the potential to really go for a lot of reasons, you know? So, and especially that it's sitting on a place tilted towards the positive versus being down here.
Exactly.
So it's good. Then we have the dollar. I'll cover this pretty quickly. We're holding above that 1/8 of the 7/8 line. It's okay so far. We have an expanding triangle. This is the low that put out the 90. So this is sort of the first pullback low here. So I'm expecting it to go higher, but I think we'll see everybody jump in, once we clear 103.5 or so. For now, it's looking good. And it's holding close to the line. It didn't just sell off and make new lows. So far it looks like it's good, but I'm waiting to see some more evidence before it starts moving in the same direction. Dollar weekly, same story. We have an inside week, and we have the low in place, came in on this trend line. So we'll let it play out. Then we have the euro. Not much. We were expecting it to sort of keep testing this, and then eventually go lower. And we're still under the 144-degree mark. And here's our zone. We're kind of stuck in that zone. Kind of nowhere land, really. It's not above it. It hasn't quite tapped 144. So, 10, 108, this area, I would call it a consolidation. And we do have kind of an expanding triangle going. We have 3 lows here, 1, 2, 3, 4, 5 going up. So we could probably, when the dollar starts to move higher, we can probably expect this to trade a little lower. I wouldn't take the buy signals here till we actually at least clear 109 or so and clear that 144, which is really important. But I really don't see that happening. I think leave it alone for now or take the short side when the dollar starts moving. And on the weekly, we have, pretty much the same story, right? We have
that line is a good line you put in. Look at that.
Yeah, that's 1/3 of that square line. And this is a half square. So it's okay. It's kind of holding there. We're expecting it to sort of turn down. Of course, that inside bar looks like it's very positive. It can break out. And yeah, it's possible we do a false break before we turn down. So be careful in here because it's kind of a decision point. You saw the daily at 144. So it's kind of a tight spot. And that's all I got for this week.
Great coverage, man. After a crazy busy week, great coverage.
Thank you. There's a lot to cover, and I know you got a whole lot to cover. You got a full deck today, so
yeah.
Let's get started, and let me put it back to you.
All right, buddy. Thanks.
Thanks. Well, there's a perfect break out there, Ben.
Yeah, just like NES, right? You had that little triangle, one day pullback, and then boom. So yesterday we made it to the top, right? We made it to the full square, and today just powered right through it.
Yep.
So the next important thing is on Sunday night, Monday, do we hold here, right? Do we hold this 13,100 area?
Right.
If we do, it's bullish, and then we can push up to here, which is call it 13,700.
Right.
If we don't, it's back in the soup.
Right.
Back in this mess that we had over here.
Well, it's just like if S&P doesn't, the ES doesn't get above 4150, back in the soup,
That's it. And then when you look left, you can see why, right? We failed here, up here at this half square. Lows here.
Boy, and right that's a perfect false break, potentially.
So, and as we mentioned, we got the timing. If we look at just the squares, April 11th, this is that April 11th, 10th area you were talking about. I got April 5th on a different cycle. So we really got to watch price action coming here. We don't have to predict. We just watch the price action, going in and out of these cycle dates. And we know the levels, right?
Yeah.
All the levels are on that Google Doc spreadsheet, by the way, which, I'll post the link when we post the link to the video tomorrow. So it's pretty clear what we have to watch next week. Got to hold 13.1, and if we do, we'll push to 13.7. If we lose it, then it's back, back in between 13.1 and 12.5.
Mm-hmm.
So we watch it and we see. Price will tell us, which direction and which levels are more probable to come next. We just have to see how it reacts to this current level. All right, so let's jump into the commodities. There was a lot of movement this week. A lot of things sort of perked up and said, "Hey, come take a look at me. I'm done correcting, or I'm done consolidating, or I'm ready to move." And so we're going to cover quite a few of them. Last week we started breaking them up into ones where they're in a bullish trend, it's set, and ones where we're trying to isolate a corner and isolate a low and get in as early as possible. So let's start with the ones that are still working on defining their lows. There's two of those. We'll cover wheat and nat gas. So let's start with wheat. Had an interesting week. We had this low come in. It's now looking like a false break, because we had an inside bar and then a big move up.
Right.
And we pushed. We couldn't quite get above the half square. So we're not out of the woods here yet. But this is constructive. We've got this pullback. What we want to see, that will give us, a lot more confidence and much higher probabilities that we did have a low come in here, is if we make a higher low and then recapture this half square.
Mm-hmm.
The interesting thing, in this whole channel and this whole downtrend, there was only one higher high, and it was a false break right here.
Right.
And we've already had a higher high here. Now we had a sharp pullback, so we got to watch that it's not a repeat of this false break, and we're going to do another, maybe we're going to get that third drive down, right? 1, 2, 3. But either way, we're zeroing in on the bottom. We saw a big bar this week here, a big up bar here this week. So I want to stay diligent on watching this corner come in. The next marker for me is let's get a close and clearing on this half square, which is, call it right around 700.
Mm-hmm.
That's the key point for me. What are you seeing when you look at wheat here? I know we've been talking about the grains, and you've been on this thing as well.
Well, we're waiting for it to clear up the bottoming process. I think that's a good way to put it.
Yeah.
And waiting for it to give us a sign, clear up a bit. We're in the zone of that bottoming zone, so we have to watch it, just like we're doing, calling it out.
Yeah, it's just like we've done on all these other ones, which I'll show you, which are in bull trends. We're doing the same thing with wheat that we were doing with them, calling them out early, watching for the signs and the clues that the bottom is in as the pattern develops.
Right.
And so that's where wheat is. The other one that's doing something similar is natural gas. So the saga continues here.
Talk about a higher low.
Well, so what's interesting is we have almost like a perfect double bottom here, right? And we're dancing with this half square. The thing, because we've been talking about this for a while, trying to figure out and find out where this low is going to be. What I want to do is go back and look at history. The last time it did this sort of garbage, double bottom, triple bottom, quadruple bottom, right?
Right.
It took it months to do it, but this, and see how the bars got really small as it came down into the low. Like we can go back, see there's bigger bars up here when it's making the high, and then it comes down and the bars get smaller. And we're seeing similar price action now. We had these big bars on the way down, even big bars, 2-3 weeks ago. And now look. So do we bump along the bottom here for a while? Possible. But we know what to look for, right? We know that this half square is the first level. We got to see it capture and clear. Then it's going to be this full square level here. Then it's going to be this half square level here. And if you watch it come out of the lows before, that's exactly what it does, right? It pushes up, captures a level, pushes up, fails. Now we go up, capture this next level. See how the pullback stays above? We can go up and challenge the next level. Pullbacks, push. So we are in a bottoming zone, but we don't have that sort of last piece of evidence that we can say, hey, this looks good. For here, right now, with the current structure, the half square we want to see, and then we want to take out this high and clear this full square. And that'll be a good sign that you've gotten the turn here.
Okay.
Anything else to add on Natty?
Well, what I can say is if we take out that low, like if that low comes in, great. We can work with the high low or outside maybe a false break. If it gets taken out, boy, my next support is about 160. So
166, yep.
Okay.
Bottom of the square, 166.
Yeah. We're gonna go right there, and that could be a very good place to start all over again. So we'll see. Watching it for now. So far, it's holding. Everything's good in here.
Yeah, we just got to watch, price to give us the clues.
Yep.
I like your scenario of a false break. Push down and then see an immediate pop back up above here would be a really promising sign.
Yeah.
So we watch it. All right, now let's go on the ones that where we've in previous shows, months, weeks, some of them we isolated the bottoms, and now we're starting to see bullish price action that we can trade a trend and use our entry methods to get in and make some money on the long side. Let's start with corn. Corn had a really nice week. I mean, look at this. Every day, except for one inside day, we were up. What I like about the price action here is we came down into this spot, did an ABCD down, and now we're rallying pretty hard out of here. Like, this is what you want to see, right? We held the full square, right? Battled for 3 or 4 days, got above it. Here's your pullback, well above the square, and then we pushed, and now we've captured the half square.
Right.
So this is how we start stepping up and creating a bottom that's tradable. So now we know above this level, we're in good shape, which is, call it around 640, looks like six. Let me see. I have it on the spreadsheet, 644.50. So right in here, that's the important level there. On the upside, you're looking at around 673. So up here, we're looking at about 673. But I want to see it punch through this trend line. We closed just on it. So that's the next thing, where we break this downtrend line coming all the way from the high it made last April. So for now, this is bullish. We're seeing good price action. I really like the way corn is acting. Anything else to add here on corn?
Well, it's interesting that the high today, or at least on my charts, 665 is really the key level to get above.
Interesting.
If we can get above that, then we're pretty good. So we're 665 on yours. Well, it's that 1/8 line, right? So
yeah, right up here.
Yeah. So if we can get above that, I think we're in pretty good shape, and it's all positive. So, but it needs to get above that. Just like it needs to get above your next full square, and holding the half is good, but that's kind of how I see it.
Agreed. But corn looks good.
All
right, let's go to the next one. Soybeans. Look at that week, man. Every bar is up this week, and we close right near the highs. So the low came in above the full square, third higher low, which is always nice to see. And really strong price action coming out of this low. This is what you like to see, because it gives you an idea, and it also gives you room for the first pullback to give you another higher low, right? And we got that. Look, every day, close it at the high, close it at the high, close it at the high, close it at the high. This little bar didn't close it near the high. So, and we're just like corn, we're right at the long-term trend line from the highs last summer. Beans looks like it's ready to run. The key level for me right now is this half square, which is around 1486. We want to see it hold that square, and then we can push up and attack the top of the square here, which is around 1596. So I like the way beans acted this week. It really put it on my radar when we saw this price structure this week. Somebody really wanted to own this thing this week. So to me, beans looks good. Any thoughts on beans? Anything else to add here?
No, beans, this is the best it's been in a while. If we can get above, if we can stay about that half square, I think we can run.
And if we don't stay above the half square we watch, do we get a higher low in the next pullback?
Yeah, if we don't stay above that at this part of the cycle, it's a little troublesome. We have to wait and see. But then, we have to make sure it holds above like 1420 or so. If we break that out, basically we're good to go. Your big trend line from the top.
Yeah. Yep. Busting out of there will send a strong message. All right, let's go. Barry covered gold and copper. So I want to take a look at silver. Look at that. Nice, huh?
Yep, catching up to gold.
And look at this price action, and then this is what we want to see in wheat, and this is what we want to see in nat gas when they actually make the turn. See what happens when this low comes in? It's no messing around, man. It's right out of here.
Yeah.
I mean, that's a strong push. And what did it do here at this decision point where this level was? 3-4 days. We were back and forth. Decisive punch through. Pullback gives us a higher low above the square. This is clearing the square, right? When we talk about clearing the square, that's what this is. This isn't clearing the square. This 3 or 4 days here. This is clearing the square. And now we moved out and we're attacking the half square and these highs we saw in December, January, February. It looks like it wants to punch right through. Now, what's the potential flies in the ointment here? We got a timing right here.
Yep.
We've got other cycles next week. So we really got to watch it and make sure we don't fail here or false break and then head back in the other direction and have to regroup again.
Yep.
So
after that run up, it's fair to, take a little breather. So
absolutely. And so you can't just, willy-nilly run in there because you got to look at, okay, how did we get here? And what's most probable to happen next? As long as we're below this half square, and the half square is 2450 area, as long as we're below that, we're susceptible and probable to pull back to the bottom of the square here, which is around 2267.
Right.
So those are your markers right now. We got resistance here, right? And we got this resistance over here from March and April last year.
Right.
So it's not the time to, go, blasting in here, guns a-blazing. If we can get on top and sit above that, then we know we're good. Otherwise, don't be surprised if we see some sort of pullback here. But we've got a nice established uptrend, right? We've got higher highs and higher lows.
Yeah.
So that's silver. Anything else to add in there?
No, we're good.
Okay. Now lastly, let's run through a couple of the softs. Interestingly enough, the softs all changed levels this week. Like they moved at least a half a square this week, all of them. So there was some flows going in there, I think, this week. Let's start with the sweet one. Now this week was significant in sugar. It broke out of like almost a 2-year consolidation if you look at it like a weekly or a monthly. I mean, this is a big consolidation. So this square here, this full square, I'll pull it back a little bit so you can see on the daily. We've been in this area for a while, this part here, this full square. So this breakout is really important. And what we want to see now, the important thing is when we pull back or on Sunday night, Monday morning, do we get a full bar above that square?
Right.
Because right now we had a close above it on Thursday and we had a close well above it today. So we want to see if we start crisscrossing this thing again, it means it's not ready. But if we can get a bar that prints above it, then we're looking at the half square as your next target, and the half square on sugar's up a little over 23, about 23.18. So the full square number here is the one to really watch, and that's 21.75. That's the key number here. But as you can see, we were doing a little bit of a pennant here and just broke out, came back and tested it, and then rock. I mean, look at where the open was, Barry, right on the pennant.
Exactly.
And then we closed at the high.
It was a nice break.
Yeah. So it's a significant break. Now we want to see what happens when we come back and test this 2175. Can we stay on top and can we hold it? If so, sugar can be up and out. Any other comments on sugar?
No, it looks, I think this is the time to watch it. We got the break. Start watching for the pullbacks. Right? I mean,
yeah. No, it looks really, really good. All right, last one, cocoa. This thing has just been slowly and quietly. Now, we called the bottom coming in here on this one. We tracked it in. We said, okay, this is where, there's a good chance there's a low. We got a false break. We pulled up. And now, again, you see the movement out of this low, higher low, higher high, higher low, higher high, higher low, higher high. And it just keeps grinding. It's been about a 6-month run. So we gotta be aware into a cycle date next week. Got to be aware, but this is a bullish breakout. This thing has been in a channel. Look at your weeklies and look at your monthlies on this. It's been in a channel for about 12 years,
right?
10 to 12 years. And we're now breaking out of the top of that channel. So we're at a critical spot. So this half square is now really, really important. That's in the about 2880 area, 2880. We hold above that and we could just go sideways and burn off some time. That would be super, super bullish. So cocoa is one, again, that if you go check the older videos, we talked about it when the low came in. We've talked about it in here. This is how a bull market starts. So now it's finding decent spots to get your entries. We watch and see how it acts on this cycle break, and there's going to be pullbacks, right? We want to see it show bullish pullback, sitting on top of a half square, sitting on top of a full square, sitting on top of previous support levels. Like, look at where this low came in, right in the middle of all this mess. So this is one we want to watch. It looks bullish. It has a series of higher highs and higher lows. Find your spot where you get in and you're comfortable with your risk reward ratio. It's a bull market in cocoa right now. Anything else to add here on cocoa?
No, it is a bull market.
Yeah.
Looking good. We've been calling it. We've been watching it, following it. And we're starting to get the breaks.
Notice the consolidations versus the moves up, right? The corrections are sideways, and then they get a thrust up. Yeah. And then they get a thrust up.
And that 2617 pullback was perfect. That was textbook.
Yep. So we're at a critical spot in the markets. That's all the charts I'm going to cover. We're at a critical spot in the markets, in a lot of markets, into a very important time cluster coming up. Barry showed you with the calendar days and the trading days. We're hitting very important numbers there. One of my cycles that I introduced to everybody is hitting next week. So there's a lot of things going on in different markets. You can't just assume that the trend that's going on right now is going to continue. And Barry, can you talk a little bit, because I've done a little bit about this, but I'd like everyone to hear your perspective about what happens when you go into a cycle. What are the possible outcomes in a market?
Well, there's two. Either we go with the cycle, like say we go from low to high, we turn back, and either we correct or we get into the down cycle. That's one. And the other is we expand the cycles. That means we blow out of the cycle, we continue on to the next larger one that's running it. To me, those are the two ways to look at it. So when you come into a cycle window, the key thing to do is to wait and confirm, are we going to blow in through it to a larger cycle, or are we going to consolidate or reverse and then start a down cycle?
And there's where you have to rely on your technicals, correct?
Absolutely. And your common sense, right?
Right. You watch the price action. You
not
watch
emotions. Common sense and emotions are a little bit different. So,
right.
You got your pattern recognition, and from studying a lot of charts, you'll have to know what happens at the end of a cycle. And that's why these squares that we use help us a lot, because we can count the cycles out. We don't have to guess from looking at a blank chart. And I'm sure some people can do it, but I can't count out all the cycles and visually have everything in place. And if you use these squares from the technical perspective, then the logic is there. You know, there's a cycle, you know how far it can push, you know how far it shouldn't push. So it helps you isolate these little spots, and you catch the next leg. It's really, you know, if you're going to follow cycles, then you have to trade from different legs. And that's kind of that's my take on it.
No, I think it's important because, you know, when we talk about cycles, the thing that happens to people when they first start using them, because I know I did this, is you have a bias. Like if it's been going up, you say, oh, we're going to make a high and it's going to turn. And then that bias prevents you from seeing that it's not turning, it's a continuation, or it's just a pause.
It's continuation because there's a bigger cycle pushing it.
That's right.
Yeah. And sometimes there are multiple cycles at some kind of a pivot, and it's almost a gimme trade, and you have to be patient to have it work out. You know, it's not always 45-degree moves. You can see how choppy and messy. And I mean, look at the chart we're up on the screen. You know, from that move down was anything but clean, and the move up was anything but clean.
Right.
But in between, we get the clean moves, and you have to parse it out and take the trades that you feel comfortable with along with your system. So, but it all comes down to system, you know, Ben. You know, we always, you know, our emotions are all over the map. So, you know, we got news, we got this, that, we got that. So I think, you know, kind of approaching it, like you said, from a technical perspective and with your common sense of, you know, your experience, let's say that's probably a better way to put it. Then you have a good combination where you can kind of control the things you can, like your risk, and you let the system that you trust with the odds that you know you can live with help you get in and out of the market, or at least in the market, and then you can have another system get out. So, but anyway, I think speaking of cycles and pivots and highs and lows, once they come in, you can allow the system to take over and take the trades in that other direction. Exactly. I mean, when I say system, it could be a methodology, right? Simple.
Oh, an entry method or something like that, right?
Well, if you look at, I mean, just a simple, I was talking to my son about this yesterday. If you look at old Gantt charts, you know, he had like 1 million lines drawn in. But if you really look, all he's doing is drawing lines off of highs and lows, and all he's looking for is when a corner squares out, from there on he's just buying the pullbacks, but the pullbacks would have to come into a Gantt line, and you know, and make sure you have your charts properly scaled and all of that stuff. But once you have it, man, rest is really easy. You know, it's not that difficult to trade along the trend, but you have to wait for your setups to come to you. You can't chase the market, you can't break the rules, you know, but it definitely pays to test the system as much as you want, because trends, you know, a lot of things can change, but market trends and patterns really don't change. They just rotate through time, and as long as you can, you know, use a square and count and draw a line, you can trade. And drawing of lines helps you manage your risk.
Amen to managing risk. That's the key.
Man, it's all about managing the risk. You know, I don't even think about profits. It's because if you can manage the risk, you allow the market to make the profit, because you can't manage profits. You don't know. I mean, this week we got lucky on some of these moves that kept going, but you don't know when it's going to stop and reverse. We don't know.
Right.
But we know where we can stop the risk, stop the market from taking anything back.
Right.
So to me, that's the only thing we can control, and if we can control that properly and have the odds in your favor, then after every corner, all you have to do is start taking the trades in the new direction, which technically should be the high probability trades, right?
That's right.
And that keeps you from getting hurt around the corners trying to catch the corner, which is, you know, sometimes things set up and maybe you can get a little toe in there and get in early, but the rest of the time you can just trade the pullbacks just fine.
Well, that's the philosophy that we try to do, which is we only take trades in the direction of the over prevailing trend, the bigger trend, right? So you have the wind at your back.
Right. Yeah.
Because there's no sense in trying to swim upstream in trading because it's not easy.
Yeah. So I think when you're younger, it's more of a sort of bit of an ego trip to be able to nail the corners. And, I bought the high tick, I sold the high tick, I bought the low tick.
Right.
But as you get older, I think you realize, hey, you don't have to do that. There's plenty of meat to be had during the next leg, whatever that is. And if it's a consolidation, you wait it out and you look for the markets that pull back to your lines. And that's why Gann didn't have a lot of trades. He only had a few trades for each quarter.
Mm-hmm.
And why is that? Because, well, he tried to catch that first pullback, and if he get positioned correctly, he'd ride that thing for 3 months. And if anything, he'll add,
True.
So
this week we got cycles. This week we got markets at critical spots. So it is a big week. We got to be very diligent and alert to the price action, because that's going to help us decide, okay, what does this cycle mean for this particular market? It's price action that tells you what's the most probable next thing to happen. So we know we've got the timing. Now we got to do the work of watching the market and listening to what it's tell us,
And this April, May is going to be, it can be very profitable. We can have a lot of moves, but we also have to be very alert, astute about the whole thing and be on top of the game.
Amen to that. Well, Barry, have a great week. Everybody have a great week. Thanks for listening to the show, and we'll talk to you next week.
Thanks, Ben. Good job.
Thanks.
We'll see everybody next week. Bye-bye.
All right. Bye.